Your Excellency, it's the Money Mindset with Razak. How are you? I hope your money is faring well. Today, I want to talk about something really interesting, and I'm sure it's going to be interesting to you too. It's about investment. In fact, call this episode Investment 101. How do you invest? Where do you invest? When do you start investing? But you know what? I have someone in the house with me. She's a wealth advisor and she works with Invest. Her name is QNwahara. Queenet, how are you?
Hi, Razak. Thank you for having me. I'm good.
Thank you for coming. I'm sure a lot of time, the first question that comes on my mind to ask you, a lot of people will be really saying, what is it? But you know what? Let's start in a very kind of subtle way.
Okay.
Oftentimes, people believe investment is meant for the rich. Let's first demystify that. Who can invest and who should invest?
Okay, that's a very good question. That's a very big misconception when it comes to investments. I talk to a lot of people and the first thing they say is, Queen, do you know how much I have? I don't have the kind of money you are looking for. And it's completely wrong. Investment is not just for the rich. As far as I'm concerned, if you can make money, you can invest. We have investments that you can start with as little as what, 5,000 Naira, you can start investing. So investment essentially is for anybody that wants to grow their wealth and also sort of sustain it as well. So, and I know there are a lot of misconceptions. Like I said, people believe you have to have a lot of money. And then some of the reasons that people don't invest as well is there's fear of loss. There's fear of loss. You know, a lot of things have happened. A lot of companies and schemes have started, ended, and people have lost money. Even if it's not, you know, you've not been affected as an individual, you know.
You've read those kind of stories.
Exactly. So we are borrowing trauma. Like, I don't want it to happen to me. Do you get? So there are those kind of things that sort of make people not invest, but it's for everybody.
I love that particular statement that you said, we are borrowing trauma. And probably that's one of the reasons why people don't want to invest. But you know what? I mean, you listening to me right now, before we progress, I think I want you to hit on the subscribe button, share, like, and comment. I think that's very important. But let's come back there. I mean, Queenet. So you said people can start with as low as 5,000 Naira to start investment. But the question people often ask is, I don't want something to happen to me. I've heard of this, I've heard of that. Where does those misconception comes from? And how do we demystify that? Okay,
so like I said, much of it is from like the negative experiences that people have had in the past, people close to us. But before you invest, it's very important to sort of have investor knowledge, know about what you're investing. I like when I'm talking to a potential client or a prospect and they're asking me questions. To me, it's a very big green flag because I can see the intrigue. You really want to know every single thing that there is to know to help you make that decision. So I think a lot of times if you talk to someone and the person says, what's the ROI? How do I get I know there's a problem. I like you to ask me, what's the money being? What's the assets? You know, what's the underlying assets? Where is it going into? What's the business structure? What are you guys doing with the funds? That's where I know, okay, this person, we need to have a detailed, you know, conversation. So the first thing that comes to mind should not be what's the ROI or your questions. Find out about the company.
So let's start like this.
Okay.
If somebody is coming to you today, someone who is watching you and I now.
Okay.
What are those kind of things that they need to force, like the factors they must consider before investing? Before you even invest, what are those factors?
Okay.
I know you've talked about risk, but let's start from some of those factors.
Yeah, very good question. So some of the things that you have to put into consideration are, what are your financial or your investment goals? What are your medium-term goals? What are your long-term or short-term goals?
Give an example of those goals. That I mean, day-to-day, like what people. Because when you say financial goals, people will be thinking financial goals. This is not football. Break it down.
Okay, what are your financial goals? Are you looking to preserve your capital? Are you looking for a steady stream of income? Also, the tenor comes into place. Are you looking for an investment that is short-tenured? Or are you looking for an investment that you
I mean, I'm in my 40s or I'm in my 50s. At that level, should you be taking risk, or should age factor be a factor of what influence people's ability to take risk?
Yes, yeah, so I think there are some general indicators, but I understand that individuals differ.
Yeah, let's talk about those general indicators.
So yeah, so for a younger person, maybe you don't have sort of a lot of people under you that you are feeding or that are dependent on you. There's likelihood for you to want to take more risks when it comes to investments, because not a lot of people in your circle will be affected. And for someone that has, come of age, maybe at retirement age, they just really want to just spend their money. They don't want to put their, put money into risky things. They just want to put something in something that will give them quarterly returns, and then just leave till, whenever. And then maybe if you're middle-aged as well, but you could still have a family and everything, and you still want to take risks. That's why I say the individual difference still comes.
At that level, as a wealth advisor, do you rather advise people to kind of blend their portfolio across those three risks?
Yes, very important. They can't all perform badly at the same time. I mean, they can, but the likelihood is low. So at least if maybe bonds and other sort of investments you have are doing bad, maybe your mutual funds are doing well, so at least it reduces risks. Essentially, that's the advantage.
So we've talked about, for example, things people should consider. We've talked about financial goals. We've talked about duration, medium or long term. We've talked about risk appetite. What are those other factors that people should, consider before investing?
Okay, access to liquidity as well. Liquidity, how easy is it to convert the asset to cash? How easy or how quick is it to sort of turn the assets into cash?
Okay.
That's what it is. There's a term like tenor. Tenor is essentially the duration of the investment. Some investments are long tenor, some 90, 60, 30, 2 years tenor. So that speaks to tenor. When I say diversification, that means there's a different asset classes that the investment can go across. So essentially it reduces risks. With diversification, you're putting it into different. So it's
like you have three baskets. It's like you have three baskets and you're putting something in different areas. So in case this basket has issue, at least you still have two more baskets.
Exactly. Let's say I want to buy shares of a company now, and then I buy for company A, B, C. I've diversified by choosing those three, companies instead of putting everything in one company. It can happen that too is the prices are low and then I'm gaining from the other one. So it reduces risk. That's what we call diversification. There's what we call yield as well. Yield is like ROI, the return you're going to make on an investment, and it's expressed in percentage. And when you also do that, it's good to find out what is the percentage. Is it per annum? Is it per month? It's a good question to ask when you want to make an investment decision.
The other thing, when we're growing up, what we see, some of us see our parents doing is owning stocks in companies, and with all sorts of global meltdown, financial meltdown 2008, and many things that have happened. Stock seems not to be the most fancy things. And we now start seeing all sorts of new terminologies, mutual market, money market, ETFs. What does those things mean? So people, when they hear, because we will still come back and talk about what people can invest in. I just want you to break it down now.
Okay, so when you want to invest, you have to do a lot of research.
I like that.
You have to do a lot of research. Whatever it is that you choose to, whether it's ETFs, exchange traded funds, stocks, you have to know. If you don't make that decision yourself, you can also get a good stockbroker that can check the trends in a particular stock. How has it been performing, to be able to predict how it will perform? You have to check market changes, the things that are happening in the stock market, generally in economies, because this kind of things affect, what happens within investment. So before you make any investments, research is very, very important. It will also answer some of those terminologies. You're going to see them come up a lot in your research. So it's good to clear them off before you take a decision.
Yeah, this is very good. And I'm sure a lot of people who are watching now will be asking, what next? And that what next, I think the best you can do is to hold on, hit on the subscribe button, share, like, and comment. And on the next episode, you will get those information. It's the Money Mindset with Razak. Hello, Your Excellency.